Where if we would have stayed on the low deductible and we're not filing a claim for 9 years, then we're just overpaying in a way, overpaying $40 a month for car insurance that we're going to use once every 9 years. And so if you weren't able to watch lesson number 25, today's lesson 26, lesson 25 goes over just some basic basic terms, terminology, and words that have to do with insurance. And so now we're talking about different types. And so a couple of types that are required. If you own a car, you need to have car insurance, okay? And car insurance fits into a category of insurance called property and casualty, or if you want to speak the language of an insurance person or you're talking to someone that has an insurance license, if you say P&C, you're speaking their language because that's what they call it. They call it a P&C license, a P&C. I actually asked somebody, or had somebody ask me what a PNC license was, and I'm like, there is no PNC. They're like, what does that acronym stand for? But no, it's PNC, but people don't take the time to speak. They say PNC. Anyway, so car insurance. If we own a car, because we can't control how other drivers are going to be, we get car insurance. Another type of insurance that's required is if we own a home, to have homeowners insurance. If we own a piece of land, a piece of property, it would be wise to have insurance on that property, and homeowners insurance falls under the property and casualty category as well. Okay, another one that as of 2018 is still a requirement is to have health insurance. Individual health insurance, or if not, then there is a penalty for not having health insurance, and that's caused quite a bit of upheaval in the insurance industry with how people are dealing with their health insurance and what they're doing in alternative plans, and that's what's so interesting about how the financial industry and just business in general reacts to laws being passed. And so something that someday, hopefully, the government will understand is that the financial industry and also business owners will always think faster, come up with better solutions than a government, a person in government, especially if that person in government has never dealt in the financial industry or in business. If government passes a law, business owners and entrepreneurs and free thinkers, not being told what to think, but that can actually think for themselves, they will always and almost always come up with a solution that creates opportunity for people, whether the law is there or not. And so a law is passed to make it so everyone is forced to get insurance through this one way, but then because of other laws that have been passed, they find that there's other, not necessarily creative, because it's all within the law, alternative ways to make sure that America prospers. And that's maybe a conversation for another day, but health insurance is another type of insurance, right? But inside of health insurance is, and we're getting off of the required topic now, because those are kind of the required insurances right now. If you're an employer, then you have to have workers' comp and all those things. But there's all those there's so many types of insurance out there that you think, long-term care insurance. Do you have to have long-term care insurance? No, you don't. But it is a type of insurance that falls under the health category, long-term care. What about disability insurance? Okay, disability insurance is under is also under the health insurance category. You have life insurance, not required, and inside of life insurance there are several different types of life insurance, but it all has to do with somebody dying. There's also under the P&C is accident. There's liability insurance that falls under property and casualty. There's homeowners, cars liability. You've got in health insurance as well, cancer insurance policies. You've got in the life insurance category and health. It's kind of a mix between the two. Is you have something called accidental death and dismemberment, or A, B, and D. That's kind of all of these all at once, because there's certain conditions happen. If you die, something happens. If there's an accident, something happens. And so there's accidental death and dismemberment. Liability, cancer, what do we have? Health, life, accident, property, casualty, home, car, liability, disability, long-term care. There's title insurance. I mean, there's all different types of insurance, right? All kinds of insurance. Okay, but what is each one? Why would somebody need this type of insurance? And does it really fill in the gap of here's what it would cost. Here's what it would cost to have this claim covered. Here's the money that I have, or that I'm willing or required to pay, which is called a deductible, or out of pocket, or whatever. Okay, not to be confused, this deductible with tax deductible. Okay, same word, different thing, but our deductible is that money that I have to come up with, and then the difference between what I come up with and what the cost of it is what insurance does. And so the justification that a lot of people have to do is they have to look at, okay, worst case, what would this cost me? And if I was to just save that money, would I have enough for the just in case when I get to that point? Well, it really is, it's going to depend on how long, what the gap of time is between when I get the insurance or I start the savings and I get to the point where I have that need for the insurance. Okay, so car insurance, let's talk about that real quick. So car insurance in order to offer car insurance, someone would have to have a property and casualty license. And car insurance, we probably don't need to spend a lot of time on this because most people have car insurance. That's why they know quite a bit about it. Is we pay a certain amount per month, a premium every month, to cover certain limits. And so we can get different limits. And when you look at a car insurance, policy, let's erase this. Just talk about one at a time. Car insurance. And I have different limits in my car insurance policy. So let's say that my limits in my car policy are 100, 300. Okay, and those numbers have to do with thousands. So 100,000, 300,000, and those numbers are going to have to do with what is covered in property damages and what is covered in other cars that might be involved or other property that might be involved in the accident, what is covered for the people that are in the car, what covers my own car. And so these are things that when you look at the limits, it's not just a number on the paper. It would be wise to meet with your car insurance person and say, hey, what exactly are these limits? What does this pay for, that pay for? What are my limits? Because a lot of the time when it comes to car insurance, people, and just insurance in general, they're not looking for proper protection. They're looking at price. And so yes, if these go down, price goes down until we need it. Because if I want to keep my price as low as possible, but I just have the lowest legal limits that I can get, and then the cost of a total accident is really high, they look over here at my coverages and they say, sorry, you don't have enough, and it's going to cost a lot of money. And so it's finding that balance between the two with those limits. Okay, so I'm paying my monthly premium for these limits. If I raise my limits, my premium goes up, right? And so then an event happens, there's an accident or whatever, and that triggers the need for the insurance, and then I have my deductible. So I have my deductible, and in most car insurance deductibles, you're going to have a $250 deductible, you're going to have a $500 deductible, you're going to have a $1,000 deductible, and that's the money that you have to come up with before the insurance company pays anything. So I get in a car accident, the total is going to be, $15,000 to repair my car, the other car, the car that I hit. That insurance company contacts my insurance company, and they battle it out and go back and forth, and they figure out what they're going to do. Okay, but then the money that I have to come up with, if I'm at fault, I got to come up with my deductible, and let's say that's $500. So I come up with $500. The insurance company comes up with the other $14,500, and I feel like I got a pretty sweet deal, right? So, but then the thing to think about is when it comes to car insurance, deductible. If I lower my deductible, so the lower the deductible is, the higher, in most cases, the monthly premium is. And so, for example, let's say that I have a $250 deductible because I don't want to have to come up with a whole bunch out of pocket if I get in a car accident. Well, if you get in a lot of car accidents, then that might be the best one to get. But I actually read something the other day that the average human being files a claim on their car insurance once every 9 years. Once every 9 years. And so you think about that, and it's like, wow, that's a long time going between needing my car insurance, and how much am I paying for my car insurance each month? Then I have to come up with my deductible. Man, that's kind of crazy. And so let's say that I have my car insurance, and I've got the right coverages. That's the first thing to make sure that someone has. And it's one of those annoying things about insurance. It's something you have to pay for that you don't need. But then if you stopped paying for it when you really need it, you'd be hosed, pretty much. And so let's say I've got my $250 deductible. I have my proper coverages. Whatever those numbers are, I'm not saying those are proper. I'm saying we just have figured that out, that we have our proper coverage. And let's say at a $250 deductible, I'm paying $120 a month. If with the same policy, all I was to do is raise my deductible to $500, it might drop this to $100 a month. If I raise my deductible to $1,000, it might drop this even further to, say, $80 to $90 a month. But then what people will do is they'll say, well, I don't want to have to pay that higher deductible, and it's not really that much of a difference. Why don't we go with this one at $120 a month, so I don't have to come up with very much out of pocket? Well, let's think about this. What's the difference? And this is just a car insurance hack that I feel like most people should know. And when I meet with them, like, I hope that they know. And then sometimes we go over this and they're like, oh, I didn't know I could do that. I didn't realize that. Right? So check this out. The difference between that and that is $750. Right? $750 difference between $250 and $1,000. What's the difference between this and this? $40. How often, though? Every month. How many months of savings until I catch up to that? Less than 2 years. It's about a year and a half. In a year and a half, I will have saved the difference between the two deductibles. So what if I do have a low deductible, or maybe, here's what's funny, most people don't even know. Most people don't even have, they're not sure what their deductible is. And they go and they look and they're like, oh, mine's low or it's higher, whatever, they don't know. And so if they were to take, and again, this were robot versus human, emotional versus logical, logically, wouldn't it make sense to take the $40 a month, start saving it every month, until we get $750 in that account. And then from that point forward, it's just a $40 per month saving, where if we would have stayed on the low deductible and we're not filing a claim for 9 years, then we're just overpaying in a way, overpaying $40 a month for car insurance that we're going to use once every 9 years. Right? Obviously, the better way is if someone already has money saved, take $750 of it, set it aside specifically to come up with that difference, and then start saving the $40 a month on top of that. Once we get to the point where we've saved that amount, well, then we can pay ourselves back the $750 and just stick it back into savings, because now, or wherever it came from originally, because now, from the difference in the cost of the car insurance, we've now saved that money. Is it always going to be a year and a half? Is it always going to be $40 of savings? No, it's just to illustrate an idea of, number one, getting a proper coverage in insurance in a way that, maybe people don't have proper coverage because the proper coverage is going to be too much. Well, if they got a higher deductible and the premium was lower, maybe they could get the proper coverage, right? And so there's just little things to look at. But ultimately, the whole idea of insurance is that if I got in a car accident, what do I have to come up with? What does the insurance company have to come up with? And since it's in car insurance a necessary cost over my life, what is a way that I can make sure that I'm being wise and economical and and having good responsibility over my money, and making sure that I'm properly covered first for the what if. And that's really all insurance is just answering a what if. What if I get in a car accident? Well, then you have insurance cover. Well, what if you don't? Well, then you've just been paying money to make sure that you feel good while you drive, right? So we'll continue as we move forward, talking about more insurances in future lessons. But the lesson for today was car insurance. So thank you for joining us this morning. Class dismissed.